I think the bigger picture long term is that this little thing, again, I don't know if they're going to be able to see this on the podcast, but it's a little stress ball with $100 Franklin.
I'll put a picture somewhere. Yeah.
Yeah. So the biggest thing is that most people's misconception with growing an account is they have this imaginary number in their head, 10,000, 100,000, 25,000, whatever number they need to start with. And they think they're going to magically grow this number into $1 million in 10 years by just profits. And you could do that. It seems like a really long time. You have to be like a brain wizard. But what we do is, we have our guys save $100 a week. $100 a week is $5,200 a year. Pretty much max out your Roth IRA. So if you're on Robinhood with 10,000, you make $10,000 in a year. You owe Uncle Sam whatever your tax bracket is on that 10,000 weeks. If my guy in Trading Experts is trading his Roth IRA, which is tax deferred and tax free when he pulls it out, he makes 10,000. He owes Uncle Sam $0 this year, and he owes Uncle Sam $0 when he retires. Yeah. So, you can be the wizard and turn 10 into 20 in a taxable account, and then end up paying the government $3,000, $4,000, $5,000. You got 15. Well, my guy's got 20 now. He's adding 5,000 years. So now at the end of the year, he's got 25. You got 15. And now let's do this game again. You make 10,000, he makes 10,000. Okay, now you're at 25 year two. My guy's now at 45. Yep. Now we're only doing year one, year two. Now scale it out 30 more years. This guy's got $2, $3, $4, $5 million tax-free, tax-deferred. You can take it out day one and buy a Bugatti and almost nothing. Or you have the guy who's doing it backwards, paying all this money in taxes and then complaining about it, doing it the way that he taught himself because he's going to be this, mastermind of the market. Right. Longer term, the fact that we have our guys being more active from a swing trading standpoint in their retirement accounts properly, and then investing more long term in the taxable accounts, they will destroy I don't care if you have the best trader on a prop firm, they're going to destroy them just because of the taxes. Right. If you're paying 25% taxes, I can make 1% and you make 26% and I make just as much as you. So that's like the real numbers that most people don't look at. They just look at I want to turn 1,000 into 2. It's like, okay, well, you just did. You all sent $500, so you only made 500. So a lot of it is the more granular stuff, but we get to that at a certain point. I can't hit you with that day one because it's going to go right over your head. Right. But once you get to that point where you understand the trade, you've built up enough of your own knowledge, then it's and then that flip switches. Where in the beginning, there was actually a member of ours, his name's Hess, and I talked to him for 2 years, and he was a perfect example of this. Has money, just bought a sick home in Denver, $600,000 home, bought it cash, always had money. And he was in getting started, and he made $5,000 in one day. And I'm like, dude, that's awesome. He's getting made in my Robinhood account. I'm like, what about your Roth? He goes, no, that's my long-term account. And he had some shit. I don't know if I can curse.
Yeah,
it is trash, penny stock. And he's I'm holding it long term, blah, blah, blah. Same story always. Week later, the stock's down 50%. And he sells it. And I hit it. And I kind of stuck the knife in. I'm like, hey, I just thought. He's like, no, man, I sold it. I'm like, okay, let me get this straight. You made $5,000 in your taxable account, which was sick. But you owe Uncle Sam money on that good money, right? Now your long-term account, this long-term investment in your tax-deferred or tax-free account that has no benefit to long-term, you just took a 50% loss and you can't even write off. So you did it double backwards. Now, if you had done this reverse, you would have lost money in your taxable account. You could have wrote that loss off, and that $5,000 would have been tax-free. Doesn't that make more sense? Or do you just like to give Uncle Sam money? And he was and in the moment, he was pissed because that was too nice because he was doing it backwards. Yeah. And he was pissed for a week or two. And then maybe a week or two later, he was like, you know what, man? He's like, that really pissed me off. But he's like, that was right. And now, like I said, he's still got money. He's doing it he's doing it this way now. And it's just so much more beneficial, so much easier. But for some reason, especially male dominated, we just want to do it the hard way. We don't listen to our parents. We want to figure it out ourselves. And it's why did I just put that switch off? It's so easy. But, you got to learn it the hard way sometimes.
Yeah, us male are a little bit hard-headed. So, all right. So, for now, anyways, I'm done with the trading expert questions. I want to go into a little lightning round before we sign off for today. And basically, I'm going to be asking you 7 questions, and these 7 questions are from the free programs that you guys have offered. and you'll have 30 seconds to answer these. And obviously, you should probably answer them in 10 seconds because you wrote them. So just try to like answer them as quickly as possible in layman's terms, as simple as possible. All right. So let me get ready here. Gotta get my Steve Harvey mojo and read these questions pretty fast. All right, starting in 5, 4, 3, 2. All right, I'll start it when I ask the first question. What is a market order?
Market order is you want to buy a stock, you hit buy, and it buys at the market price.
Okay. What is the S&P 500?
S&P 500 is the 500 biggest companies in America.
What is a stop loss?
It's an order that you put in that if a stock goes below a certain price, it will market you out.
What is a 5-1 risk reward?
So for every dollar that we risk, we look to make $5 on what we risk.
What is the difference between day and swing trading?
Day trading is you buy and sell on the same day. Swing trading is when you buy and hold for more than one day.
Time. Damn, 2 questions left. I'm going to ask it to you anyways because those are long questions. And you basically, it's funny because we spoke about it a little while ago. What account would you look to hold long-term investment in from a tax standpoint?
I think you can answer that. What do you think? What do you think the answer is?
Just had it too. Damn.
Taxable.
And then, which account would you look to hold to trade more actively in a tax standpoint?
So again, we're gonna do some asterisks. If you are making money, if you're actually like you've made money last year, you made money the year before, then yes, trading your retirement account and holding your taxable account be more beneficial from a tax standpoint. If you're losing money, and to be honest with yourself, you don't have to tell me, you don't have to tell you, right. You know you're losing money. Do not do that. Hire an advisor, DM me, I'll manage your real money, and then you can do your own thing in your trading account and you can write up those losses. But that's the one main thing, because especially for our guys, that strategy works if you make money. If you don't make money, like most people who want to do it their own way, then you got to do what everyone else does. Lose money in your taxable account, write it off the next 10 years, and put the boring stuff in your IRA. But if you can actually make money, you learn from us, you do it your own way, then yes. Longer term, taxable, think Robinhood. Shorter term, think Roth IRA. Think your E-Trade Roth or your Fidelity account, or even Acorn's a great app, but that you can't trade. That just helps you build up the account.
Amazing, and I'm writing this stuff down, even though I just read it. All right, and that's pretty much it for today. Ben, any last words for the people listening on YouTube and Paradisos, all our fans out there? Anything you want to say? Any closing thoughts?
Yeah, if there's anything that we can do to improve, again, DMS at Trading Experts, always open to hear your opinions. If you guys have any questions, realize I will always give you, my partnership will always give you the real answer. It's more than likely not going to be the answer you want to hear, but we will always give you the truth. If the stock is trash, we're going to tell you it's trash. If the stock is great, we'll more than likely buy it with you. So just remember, when if you take your ego out of the equation, investments become a much easier, ballpark to play in than when you walk with a chip on your shoulder.
Amazing. Ben, thank you again, bro. You are the freaking man. I can't wait to sit down and just have a beer with you and continue to talk. We always have some awesome conversations. Thank you again for just sitting down and taking the time and speaking to everyone and just dropping some freaking knowledge, bro. Dropping some knowledge on everybody on trading, life, books, cars, everything, man. I really, really appreciate it.
All right, man. I'll see you June 15th in Brooklyn for Shakes.
Definitely. Ben, thank you so much. And for everyone listening, thank you so much for tuning in and listening to Ben and I talk and just listening to the knowledge this guy has. And hopefully we can do a part 2, part 3, maybe even a series where we can sit down and just talk about trading nonstop. For everyone out there listening, thank you again. Check us out, Paradisos Podcast. Instagram, www.paradisos.world, and Paradisos101 on Twitter. Until next time, God bless you all. Goodbye.